Yeah, good morning, everyone. Thank you guys so much for coming to this morning's Back to the Basics session. Even for those who couldn't make it, this will be recorded. So you will be able to view this session, um, at a later time. But as you guys know, during today's session, what we're going to do is cover some of the basics, or really the main points that you really have to understand if you want to understand how the market typically moves. So then, of course, we've been having these back to the basics sessions for a while now. We took a nice break. And of course, what we want to do is get back into the groove of things, because we do have newer members in our group that may need more information or more help when it comes to this basic information. They may need to understand what is a trend. They may need to understand how to identify market structure. They may need to have more training and information on how to spot certain patterns. So then, of course, in these back to the basic sessions, that's what we're going to cover. Now, for those who are more experienced, remember what we said in the group. We said during every single session, we will always take the time to reveal a golden nugget or something that you can take from today's session. So then if you are more experienced, don't worry. If you already know this information, of course, please stick until the end of this meeting. I'm pretty sure you'll get something that would definitely enhance your trading for the weeks and possibly months and hopefully years to come. But with that said, I guess we can move forward. And if you guys have any question during the presentation or during today's session, just let us know. Of course, this is for you guys. Our main job is to help you guys understand how to read the market and know what to do. Now, it's not saying that we will be right every single time, but if you apply some of the information that we're going to reveal even in today's session, you should have a statistical advantage in the market. You should have an edge that you can exploit and take advantage of. So then we definitely want to rehash some concepts, go over the basic with you guys so you guys can exploit that edge and make money from the market. So then with that said, I guess we can move forward and we can just do some review of what we talked about during the last back to the basic session, which I believe was a little over 2 weeks ago. I believe it could have been 3 weeks ago. I'm not sure of the exact date, but we had a session a few weeks ago where we covered the concept of directionality and trend. And one thing you have to understand, I know we pointed this out, before, and we keep hammering this over and over again, but whenever you're trying to spot whether the market is moving in the upward trend, you will always see higher highs and higher lows. But not every higher high and higher low will you count. And we're going to talk about that in a little bit. We're going to show you. But in a downtrend, what we want to see typically is lower lows and lower highs. So let me just quickly review this so you guys can get the point. But remember, in an uptrend, what we're typically seeing is higher highs and higher lows. So we get a higher low, then we get a higher high, then we get a higher low and a higher high. That's in an upward trend. That's typically what you will see. But in a downward trend, what you would typically see is lower lows and lower highs, lower lows, lower highs, and lower lows. Now, it's not that clean as far as how trends usually form. It's not as clean as this. But if you understand what you have to look for in order to define what is a true higher high and true lower low, or as far as the different trends go, if you're in an upward trend, you want to really pay attention to the higher highs. If you're in a downward trend, you want to really pay attention to the lower lows. But if you understand what makes a higher high in an upward trend and what makes a lower low in a downward trend, then that's pretty much half the battle. You can get an idea of what the market is doing. So then we talked about this last week, or not last week, but a few weeks ago. But what I want to do is drop down and share with you what we did during that last session. So then, we had this example where we talked about how to actually apply what we did up here, right here, defining higher highs, higher lows, and lower lows, lower highs, but how to apply that in a real scenario, real market price action scenario. So then this is what we did. So then we had this initial low right here. Price comes up, forms this initial high. And then once we correct, we have a higher low because this particular low is higher than this initial low. So then we have a higher low, but we don't know if this is an upward trend yet. Because remember, the recipe for an upward trend is both a higher high and a higher low. You need to see both in order to know that we're in an upward trend. As of now, we just have a higher low. So then once we get this push right here and a break and violation of this structure right here, let me just add this. Once we get a break and violation, let me make this a full dash line, or I could have probably just dragged that. Let me just do that. Let me delete this line and let me drag this one. Oops, right here. So then as soon as we get a break of this high right here, we now have what you would consider to be a higher high. So when we have a higher high, and then all we have to do next is wait for that pullback. And, we get the pullback, price creates this higher low. And then from there, in order to know when our next higher high will be, price will have to break this high. So when does that happen? Right here. It breaks, it expands, and then we get this higher high up here. So then, we're in an upward trend. But with everything, with what we know about the market, trends eventually come to an end, or there's a period of confusion or ambiguity. But it doesn't mean that we won't know what's happening, because in this case, what does price do? Does it form a higher low after this higher high? No, it doesn't. Price pushes down and it forms this lower low again right here with this LL right here. Forms a lower low. And after a lower low, what you need to look for is a lower high. So price comes, forms a lower, finds resistance here, creates a lower high, and we see price sliding to the downside. This could have been a selling opportunity. But after price formed this lower low, we'll be looking for another lower high. But do we get that? No, we don't. We see price push all the way up, and it breaks this high again, forming a higher high. Price corrects, forms this higher low, and then we pretty much see price continue making higher highs and higher lows for a while. So then price breaks this high, closes above it. Remember, we always want to wait for price to close above the high, and it forms a higher high. But you guys get the point. In an upward trend, we're seeing higher highs and higher lows. In a downward trend, we're seeing lower lows and lower highs. But in this case, this is when it becomes a little bit confusing, because we have a higher high right here. Let me clone this. We have a higher high right here after price formed what you would consider to be, let me drag this down, what you would consider to be a higher low. Let me clone this and let me drag this right here. So then we have this higher low right here. Price forms this higher high, but what happens? Price eventually breaks below this low, and it forms what? It forms a lower low. So then right now we're a little bit confused on what's happening. Price went from having a higher high to having a lower low. We don't want to do anything yet until we know for certain that we're seeing a change. But what does price do? Price pushes up, creates an EH, which is what we call an equal high. And when price does this, we want to sit on our hands. We don't want to do anything. And then from there, price falls down. Strong move to the downside creates a lower low. And even when price creates a lower low, in this case, we still don't have a buys yet. We need to make sure price creates a lower high in order to know that we're seeing a reversal in price. But in this case right here, we could have been confused. We could have been confused right around here, where we would have thought that this was the lower high. But for those who have been with us for a while, why would we have not considered this a lower high? Or why would we not have considered selling right here? For those who do know, like, look at certain indicators that we've talked about before. For those who are familiar with some of the indicators that we use. Like, why would we not have considered entering a sell here in this case right here? You know, because price looks like it's about to form a lower high. But why wouldn't we not have sold here? And I know this may be for those who are new. If you're watching this, you may not know exactly, but we have to look at one of our indicators to know for certain. And the indicator that I'm talking about is the 20 simple moving average, for those who are familiar. And we're going to talk about this in more detail later. But in this case, the reason why we would not have gone short here or entered a sell after price appeared to form a lower high right here, even though it didn't become a lower high, is because the 20 SMA is starting to flatten out and slope to the upside. So then that's the reason why we would not have really entered a sell, you know, once price reached this particular area. And, you know, what we see here is price kept pushing higher, and it formed what we would call a higher high right here. So then from here, price corrects, forms a higher low. And then what happens? Price breaks to the upside and it forms a higher high. So then right now, I know, yes, Stuart said moving average sloping over, change in sentiment. Exactly. Oh, yeah, in regards to this right here, this is the reason why we would not have entered. But, you know, if you was looking solely at price action alone, as far as these waves and how you read a price chart, you would have probably been tricked into actually entering a short, you know, and that's the power of using all these factors. Like if I was to hide this 20 EMA right now, like right now, because we don't have the 20 EMA to share with us, you know, what's going on as far as the momentum changes, we can easily get tricked into entering this sell and hoping for price to at least test the lows or push past it. But because we have this indicator, it's going to keep us out of certain trades that we don't need to be in at all. Because remember, we only want to enter sell trades when the moving average is sloping downwards. We want to enter buy trades when the moving average is sloping upwards. So in this case, price pushed up. You had a higher high. As soon as we created this higher low, then you would have looked for a buy right around here, right around this area right here. This would have been a good opportunity for you to execute your buy right there. Right, let me drag this right around here. So right now, we see that price formed a higher high right here. So we get this higher high. Let me clone this. And now we need to figure out, how do you do this when you don't have the chart already plotted? So then we're going to talk about that right now. So then right now we have empty space. We have this gray area to the right, and we don't have anything. So then how would we do this in a play-by-play scenario or real-time scenario? Where we're going to talk about that right now. So then price formed a higher high. What we need to do is wait for price to form a higher low. So of course, we're going to wait for price to retrace, right? And most likely price may find some support right around here or in this area. And that will be another topic of discussion, because what this like these swing points right here usually act as good support and resistance areas. That's the reason why it's very important for you to draw your price wave so that you understand what is happening, you know, in the market. But anyways, we see that price push down a little bit, but we see some bullish momentum coming in. If you're going to look for an opportunity to buy, you can, if you want. If you're assuming that this is where the buyer is going to come in, 20 SMA still sloping upwards. If you want to, you could enter a buy right here and see what happens. But as you guys can see, price pushes up, and then we can close out right here if you want to. Yeah, so then we see that price hit this area right here. But do we have a higher high yet? Let me ask you guys that question. Once price reaches this area, do we have a higher high? Yes or no? Yeah, no, right? Yep. Thanks, Sonia, for chiming in. We don't have a higher high. Remember, price would have to break and close above this high in order for us to have a higher high. So then, we don't see that higher high form. So then, there's a possibility that things could be changing. But anyways, let's see what happens. So then 20 SMA is still sloping upwards. Remember, we want to look for buying opportunities. We still have this higher high, higher low scenario. Price hasn't proven that it's still maintaining its upward bias. So then let's see what happens. So then as we do tick by tick, and yeah, as we do tick by tick, let me clone this. Right now, we're in a potential period of consolidation since price tested the highs and now it's correcting. We're in this period of consolidation. And at this point, we don't want to do anything until we either see a break of this high or a break of this low. So then what we're going to do is move forward and see what happens. Now we get the break of this low. So then what we can assume is that price is now in the midst of a reversal. We now have what you would consider to be a potential lower low right here. So let me clone this or copy this and drag this right here. So now we have what you would call a lower low in this case. And if you want to, you can draw in your waves if you want, because this would be, an equal high. But then right here, we have what you would consider to be a lower low. And what we want to do right now is wait for price to correct and form that lower high. And 20 SMA still sloping downwards. So we're looking for a sell setup. So then most likely, based on what we know, remember what I mentioned about these pivots and these swings. These pivots and swings act as areas or zones of support and resistance. So in this case, what we can assume is that somewhere right around here, or let me make this yellow, make this blue, is where price is going to go to, retrace to, before we see price slide lower. And how am I defining this zone? Well, it's where this swing low is and where this swing high is. This zone right here is the area of interest. So then let's see what happens right now. So then we're waiting for a lower high. And from there, we'll be looking for a potential sell. Okay, so price looks like it's hit this zone right here. So, okay, so then right around here is where we will look for a potential sell. Right now, we're in this particular zone. So if you want to, in this case, we will enter or look for a potential sell, right around here, and see what's going to happen. I don't know what's going to happen. So let's see. So do we get that? And it seems like price. Okay, so then right here in this case, we know that price is reversing. So then we can close out earlier. How do we know that? Because now the SMA is sloping upwards. So then the minute we see that, that's when you want to close out your trade for either small loss or break even. But so then, of course you would do that because the 20 SMA is now sloping upwards, and that could indicate that we're seeing a change in momentum. Now, we may be wrong. Price could actually push to the downside, but because we see the 20 SMA sloping upwards, what we're assuming is that momentum could be switching and changing, and it's best just to close out your position. So let's see what happens. And as you can see, price goes a little bit higher. So right now we're in some ways, we're pretty much in a period of confusion because right now, we have the lower low right here. And, we still have our higher high right here. So then right now we're in this period where, we don't know what's going to happen. if you want to, we can be sort of out of the market until price violates these two levels. But anyways, let's see what happens. Okay, so price does go down, and we finally get a break and violation of this low right here. So then now we can complete the drawing. So then we have our lower low, price pushes up, forms this lower high, and now we get this lower low to form right here. So then let me see if I I know Adam asks, could it be a three-wave or complex correction? Yes. I mean, actually, to be honest with you, it is. It's a three-wave correction. It's a complex correction on the 1 hour. We have for those who may not know, this is a little bit more advanced, and we can definitely cover this later. But what we see right here is a three-wave pattern. We see leg A. I need to change the color to this. Leg B, and then leg C up here. Let me change the color. Make that blue. But we see this three-wave correction, and then from there, price fell to the downside. So then, that's what we see here. This is what you call a complex correction. Prior to it happening, it's a little bit harder to predict when it's going to happen, but sometimes you can tell just from the nature of the correction to the upside when that may take place. So, but of course, we do see this three-wave pattern, and then price fell to the downside. But right here, we have this lower low, and let me clone this, and we have a lower. We went from a lower low to a lower high right here. Okay, and then from there, that's when price fell lower. So then, of course, it may want to maintain its bias to the downside. So then, okay, so then right here, since we know that price created this lower low, we can draw out this particular wave to the downside. So then now we have, price creating a lower low. We have the 20 SMA sloping downwards. So then what does that mean? Do we want to look for a buy opportunity or sell opportunity? Let me ask you guys that. Do we want to look for a buy or a sell now? Yep. Okay. Yeah. We want to look for a sell, right? So then what we're going to do is wait for price to pull back. Where do we think price is going to pull back to? Right to this area of structure right here. Look left, structure leaves clues, this whole area right here. So then let's see what happens. So we're just going to wait and see what happens. Okay. And it sort of tested this area, but it didn't quite touch it. But you can see that price went down, right? So, that was a sell opportunity that we could have took advantage of, but it didn't quite touch it yet. But if you understand what we've been talking about as far as for the past few weeks, a three-wave pullback, you probably would have got into this trade and, for this move to the downside. But we see here that we have a lower high, and then now we're seeing this lower low form. And what are we waiting for still? We're waiting for a lower high. But you guys get the point. You guys get the point on how this all works. But, what we're definitely waiting for is for price to eventually, correct. Now, this is a strong correction. So then, whenever you see something like this, you have to be extra careful. Even though we see the 20 SMA sloping downwards, price did break above structure. So then what could happen is something like this. Boom, boom, down and up. That could happen. So, of course, whenever you see a strong correction like this, you won't really go in for a short. you'll just be a little bit patient. And as you can see, price pushes up, right? So what we have right now is a potential reversal. We go from having price making lower lows and lower highs to now price breaking this recent high and creating a higher high. So we can draw that in. But I hope you guys get the point on how this all works, like in a real-time scenario. Now, what we want to do is wait for the pullback, because we want to try to look for a buying opportunity. We need to see price create a higher low, right? So then anywhere within this area is where we should see that. Let me do this right here. So anywhere within this area is where we should see that lower high forming. I know price is testing the area now. So then one thing we do know is that if we somewhere in this area, we'll be looking for a potential buy. And let's see what happens. So just going to move forward. Okay. And we see price push up from there. Okay. So then, you know, it looks simple when we do this, you know, but of course, if you stick to exactly what we're sharing with you in today's session, you should do fine. So right here is where we get the higher low. And since price broke and closed above this high, we're still maintaining that upward trend bias of making higher highs and higher lows. So if you just stick to this alone, you should do fine. You should do well. Of course, we give you all the extra stuff, all the advanced stuff to enhance your trading, to make sure you know what's going on really at a smaller microscopic level. But for the most part, if you stick to this basic strategy, then you should do well. So then we have a higher high. What we need to wait for now is a higher low. Where do we expect price to go? Price could go where this structure area is right. Yeah, right around here is where we would look for price to go to. You know, we just look left, structure leaves clues, you know, right in this area right here where we see, you know, these highs, the structure area right here. We're expecting that area to act as support. So then what we'll do is just wait for the correction. Of course, based on what we know, since we had a strong move, this may be how far the correction goes. And let me just throw in a little bit of something advanced for you guys. Let's go down to the 15-minute to our trigger time frame, and let's talk about what we've been talking about for the past few weeks. For those who may not understand how to identify these pullbacks, but what we have is price consolidating, price breaks to the downside. Well, it forms like right here. This is where it can get kind of tricky right here. It really could, because right here you do see what some people would consider a three-wave. We see price break down, correct higher, and then we have this impulsive move to the downside. So then, you know, whenever we draw these waves, what we want to see, for one, let me just draw this in for you guys. We want to see a violation of structure. So then in this case, we see price, you know, violating this low. We see a break and close below this low. You know, however, it wasn't really clearly defined, really, like even this one. So then what I'm going to do is take this low right here. So then, you know, we have price, you know, breaking this low to the downside. And let me change the color. And this would be representative of how far price could potentially go in this move to the downside. And, you know, what we typically do is, let me change the color. You know, we typically draw in what we would call a 2-3-6 measure move. and that would represent the zone that we're expecting price to go to. So somewhere right around here is where we're expecting price to, retrace to, or a potential retracement to, somewhere right around here. And it makes a lot of sense because, for those who are familiar with what we teach, we see hidden structure right here. So then, we're expecting for price to fall into this area and then look for a buying setup from there. So then, if you want to, you can stay on this trigger time frame, or we can go back to the 1 hour time frame and wait for price to reach this particular zone. So let's see what's going to happen. Okay, so price went, tested this area, this zone right here. And what we could do is go to the 15-minute chart as well. And there's a number of things you could look at. We see that stochastic is over. So then if you want to, you can enter a buy right about here, right about now. You can enter a buy somewhere in this zone, and you can just wait for price to push higher from there. So let's see what happens. If we went down to the 1 hour, let's see if we do get that. We could be wrong, but we could also be right. So let's see what happens. Let's hope that this holds. And yeah, and whenever you do trade, you may have some slippage. You may have, where price actually, where you're in drawdown, where you're at a loss for a while, but just hold to your trade until you get stopped out. The trade hasn't failed you yet. It's not a loser yet until it hits the stop loss. You may be in a slight drawdown while that trade is still active, but it hasn't hit your stop yet. Yeah. Good morning, everyone. This is me, Marvin, and what I just kind of wanted to highlight is because we're entering in at the end of what we project or assume to be the end of that correction, that three-wave pullback, there's a possibility for you to have some negative slippage, that it may go down a little bit, because of course this is all based on our analysis. It's all based on what we see to support and give us a reason or a justification why we should buy. And we got to also keep in mind that we're not entering the buy on bullish confirmation. You remember, we also teach, to wait for a price to break a particular structure to the upside. That's on the trigger time. On the trigger time frame, and then look for your opportunity to buy after that. But since we're not entering on bullish confirmation, you may see that slippage. But to not be alarmed, just like Melvin said, hold on to your trade, hold on to your position, because it's not a loser until we see it really hit the stop loss. and also the trade idea could be correct. It could be going up, but it's always like, what's the most complicated part of trading is identifying and precisely locating the point of entry, or when you want to see that, or when you want to buy or sell, the exact point or area, the precise point. So then that's the complicated, and but then I just kind of wanted to mention that so that you guys won't be alarmed, because sometimes when you do these three-wave pullbacks and enter in at the end of it, you do experience some slippage, sometimes. Yeah, some drawdown. Yeah, and you may be at a loss for a good portion, like for a long time. You may be on the losing side of that trade, but don't be alarmed. Still stick to it. Hold to the trade until it hits your stop. So then let's see what happens. Let's move forward. And we can see that price pushes up and it tests the highs right here, and then it starts sliding to the downside. So you could have closed out right here if you wanted to, or this could have just be a pullback to fake you out of your trade, and then it could push back up. Or it could be the third way. Yeah. So then, we'll see what happens. So then let's see. Okay. So then price pushes a little bit deeper in this zone right here. Now, if you would have closed out right here, you will be at take profit. But if you had a higher target or a larger target, then, of course, you could be in some drawdown, especially if your stop wasn't far enough. If you had a tighter stop. Yeah. So then, if you had your TP1 here, then of course you would have took partial profit, and depending on where you would have entered your trade and where your take profit was, you probably would have had a wide enough stop to sort of hinder you from being stopped out. But the thing is that if you would have took partial profit, that would have covered whatever losses that you may have
you know,
they have
incurred from the trade. But because it's tested as high, there's a possibility that this could have been the initiation of the third wave, you know, lower too. And we saw a deeper, you know, correction, like the wave could have been from here to here. And then, you know, we could, you know.
Yeah, well, this wave right here is lower.
Yeah, it's a little bit longer.
Longer. So then, I mean, we don't know, but one thing we do know is that price is still maintaining this bullish price structure where we have a higher high, higher low, and a higher high still. So until price really violates this structure to the downside, then, you know, we don't need to be alarmed. We could still be in a bullish move to the upside. So then price could very well hit this zone right here where this true swing point is, this structure area.
Yeah. And that's why, like, even if you do get in on the end of this three-way pullback, sometimes it may be wise to make sure your stop is somewhere below this previous swing point, because the important thing, you know, about understanding support and resistance, and we talked about it before, is that a lot of times, you know, price does try to make those connections to those previous lower lows, lower highs, those previous swing points. So then you remember, support and resistance can serve like a magnet. And of course, structure leaves clues. So then sometimes, like, if we identify and know that this area of structure has been respected, if we look to the left, we can see that this is a critical zone. You know, price sometimes like to be attracted and drawn to those zones. So then you want to make sure that even if you enter early at the end of this three-way pullback, that you do have a stop that takes into account that this is a major structural zone. And there may be an attempt for price to collect some bids down here in order to absorb liquidity, enough liquidity to help in the extension and the expansion to the upside.
Yeah, like I know Marvin gave you a lot of information, like absorb liquidity, all of that. Like, of course, those are concepts that we want you guys to understand. I mean, even though this is a basics, back to the basics session, but what Marvin is pretty much saying is that the market may want to really, really move higher, but they may see some orders down here, and they may say, hey, we need these orders down here in this area in order to help really push price to the upside. So then that's what really Marvin is saying, because even the market makers, they need certain things to happen. They need certain orders or liquidity. They need to open certain transactions or trigger certain transactions.
But they make their money from those transactions being open as well.
Yeah, but they need that in order to help facilitate price. So then that's the reason why, you know, Marvin talked about gathering liquidity by pushing down to this area. But let's see what happens. Right now, we're still in a bullish uptrend. We haven't changed our buys yet. And, you know, we'll see what happens. So then as of here, so then price pushes into this zone right here. And this could be where we enter another buy if you did get stopped out. Let's say you did get stopped out. But if you didn't get stopped out and your stop was behind this structure area like Marvin talked about, you'll be safe. You know, you wouldn't be at a loss. But, you know, of course, most likely you probably did get stopped out, which is okay. You know, because it doesn't mean that, you know, you're going to get stopped out. Let me just say that. You know, you're going to have losers. That's with anything that you do that has some level of randomness to it. You know, you're going to have losses. So then you have to account for that. But what we do know is that the trend is still to the upside. The bias is still to the upside. So then we still want to maintain that bullish bias. But let's see what happens. Price hit this area. You know, we're expecting price to push up. If it breaks this zone to the downside, then that's when we need to definitely change our bias, and we could be seeing a rotation lower, and then we may want to look for a retracement to this zone and then a sell. But as of now, we're still looking for the buy. So let's see what happens. Price pushes down. Okay, and it looks like it may want to. It's a bunch of confusion with all these wicks. But yeah, this is when it gets kind of confusing. But price eventually does break to the upside. Now, during this whole phase right here, why would we not have entered this trade right in this area right here? Let me ask you guys this question. Like, why would we have held out a little bit? Like in this area, we would not have entered a buy. Why is that? Like the reason why I'm asking, because you know, you need to put the pieces together so that you know what to do in a real scenario situation. But why would we not have looked for an opportunity to buy once price got to this area right here? Yep. Adam said it, the 20-hour moving average is still sloping downward, right? So then the very fact that we see that, of course, we know that we're having a higher high, whatever, you know, of course, the trend is still to the upside. But because the 20 SMA is sloping downwards, we don't want to look for a buy yet. Remember, we have to see price create this higher high, higher low structure, and we have to see the 20 SMA or the 20-hour moving average start sloping upwards before we consider buying. So then, of course, in this section, we're just waiting. But when does that happen? It happens as soon as we start seeing the 20 SMA break this high and we see it start sloping upwards. And this is when we can look for a buying opportunity. So then right around here on this pullback, we could have entered a buy.
Yeah.
Right around there.
Yeah, and that's equivalent of, you know, the confirmation, waiting for, you know, bullish confirmation, because we see this structure, you know, forming, and it breaks that structure high in a sense.
Yeah.
You know, we see price break above this consolidation, this structure, and expand a little bit. And at that moment, the 20 simple moving average is starting to curl upward. So then we know that, okay, right now we have bullish confirmation. It broke this structure high right here. And all we had to do is wait for a significant pullback and enter, you know, our buy from there. But you can see that it pulled back right back, like into this, you know, near this zone right here, because this was a key critical zone. You remember the price history revealed that. So then, you know, this could have been a good opportunity to buy. And we would have bought at actually a lower price than where we initially, you know, bought up here. And it would have been a better position. You got a lower position, a better positioning for that trade.
Yeah. Now we still don't know, you know, if this is going to, price could very well go down. But at least we have more clues that something could be changing, or there's a possible reversal taking place. But anyways, let's see what's happening, because of course we want to draw these lines out. We're still in a bullish type market, but you know, we had to wait for the 20 SMA to prove that we're in that environment in order to get in. So then now we're in this particular trade. Let's see what happens. So price is going up, and now it's coming back down again. So then if you want to, you could close out, you know, right around here. Once price created this wick, we see the 20 SMAs starting to flatten out, but you can also hold. But if you hold, there's a possibility that you can get stopped out. But then that's what makes trading a little bit difficult, is knowing when to close out, knowing when to hold, and knowing when to really enter the market. No one has a 100% solid blueprint on how to really be 100% accurate with your trading decisions and know exactly what the market's going to do. But what we do is look at what we do know and try to make an estimate or forecast on what could potentially happen. So then, you know, we'll see what happens. Right now, price will either have to break this level, or where's the other line? Or break this high in order for us to really know what's really going on, you know, because right now we're in a period of confusion or ambiguity. So anyways, let's see what happens. Let's move forward. Okay, price continues its push to the upside. That was probably just a fake out, and we see, boom, got a higher price pushed up, and now we have our higher high right now. So then now we can complete this wave. Let me just draw this in. So we have this wave, price
complex correction
comes down, forms this
this unusual pullback.
Yeah, unusual pullback, which is supposed to be a higher low because it's higher than this low. But because we see a violation of this structure right here, we have to wait for bullish confirmation before we actually get in. And that's one thing you have to understand. If you see price break this structure right here. If you see price break this structure to the downside, then it's best just to wait for bullish confirmation and don't really pay too much attention to that three-way pullback because price could be changing and rotating. But in this case, we see the bullish confirmation and eventually price did push to the upside. So then now we do have a higher high. So let's move forward. And now we can draw in the remainder of that wave. And then I want to show you something. Okay, so we have this wave. Now, what we drew in was the true wave structure of the market. Because what you would typically do, like if you draw it right, you'll typically see that the market moves harmonically. Like, can't you see that the length of this move up here is very similar to the length of this move? Like if we just take this line right here
and clone it.
Yeah, we can clone it. Let me clone it. Take this line and we drag it at this low. Where does price go? Right to the same area again, right? Whenever you draw these waves precisely in the right manner, it's always going to bring more clarity on the true move of the market, like what's really going on. Like it makes it easier for you to have an idea of how market is moving. Like all this stuff right here was just noise. It was just noise. It meant nothing. But if you draw the waves correctly, it removes the noise and you get a better insight on what's really happening. So, you know, that's the beauty of drawing these waves. And you could say it's the same way with this move right here. I mean, like if we was to clone this line right here, let me clone this line. And if we were to drag this where this high is right here, we can see that it's pretty much almost, you know, where this low is, but you can see that the market moves harmonically. Like if you draw in these waves properly, you would typically see that. Like it happens, and it's like the purpose is to show you that you're viewing things correctly. You're viewing things like you should be viewing things, and you know, you just have to follow the wave-like structure. Remember, price moves in waves, and the waves really help you to determine what the market is doing and how you should trade the market. So in this case, we see that the market did move harmonically. You have a 100% one-to-one measured move. Price moved harmonically, and it created a higher high. Now what we need to do is wait for price to create a higher low. So then where will we look for that? Right around this area. This is where we would look for that higher low. So let's see what happens. Okay, price is in this area right here. And does it look like a three-way pullback? Yes, it does. So, you know, right around here, if you wanted to, you can enter a buy. Now, one thing I want to point out, you see how, even though we didn't drop down to a smaller time frame, we could see that we have sort of like a three-way pullback. We can see it even on our 1 hour time frame. Like, let me just show you. You know, we see that we have leg A. This hesitation candle right here makes leg B. And then we have leg C down here. So then we do have what you would consider to be a three-wave pullback. So then right here is where, you know, if you wanted to, you can enter a buy. But we can see that even on the 1 hour. Like even if you did not drop down to your trigger time frame, you will be able to see that. But here we are on the trigger time frame. Right here, we see that three-wave pullback. Leg A, leg B, and leg C. So sometimes even the 1 hour chart will show you how you should draw in your waves. But anyways, let's see what happens. Let's zoom out and let's see what happens right now. So then right around here, we're looking for another buy. Let's see if we get that. We may get that or we may not. Momentum could be shifting. And let's see. And it does. It does shift, and this could be a stop for us. It could be a, you know, stop loss. But one thing I want to point out, and I mentioned this before, oftentimes whenever price does breach this previous structure right here, sometimes it's best just to wait for bullish confirmation. Even though we may see a three-way pullback, because it breached it, because it corrected lower and violated this structure, to play it safe, it's always best to wait for bullish confirmation. But price did continue pushing down,
right?
But we're still haven't seen a reversal yet. We could still be in the middle of an upward trend. We just have a deeper correction.
So then right now, we're sort of in this period of ambiguity, in this gray zone. And just like Neville said, the fact that it broke through this previous high, this higher high right here, right now you just want to wait for confirmation on anything you do. But right now, price would have to either break above this high to sort of confirm, or or this low, right?
But we're still in an upward bias right now. But what we need to do is just wait for price to give us the confirmation that we need. You see the 20 SMA sloping, starting to flatten out. So then this is where we wait. We wait for the market to pretty much tell us what is going to happen. So then in this case right now, the 20 SMA is sloping downward. We definitely don't want to look for a buy right now until we start seeing this slope upward again. So we need to wait for price either to break this low or for price to create a bullish environment. So I'm just going to wait and see what happens. And as you guys know, price broke and it formed a what? When it fell lower,
I guess we can let them answer it. Like, what did it form? Did we get a higher low or a lower low? We'll have you guys chime in.
Yeah, because this is very important to really reading the market properly and knowing what you should do. Like, I know if you practice this over and over and over and over again, something that is basic, then trust me, it's going to definitely enhance your trading. It's definitely going to pay off. But yeah, it's very important. It's very important for you to practice this over and over again. But yep, Brandon said lower low. Sonia said lower low. Chris said lower low. Exactly. We have a lower low that formed. So then in this case right here, we have this lower low. Let me clone this and bring this over. We have a lower low. And what do we need to look for next? We need to look for a lower high. But let's see how far this low goes before we get the correction. So then we see that and we see this move. So then we have price pushing all the way down here. And, this is our lower low. Now what we need to do is see what happens, right now in this area. Price may test this particular zone, but this was a strong pullback. But if price breaches above this zone, if we get a 1 hour break and close above this zone, then that's one setup where you would have to wait for some sort of confirmation. But I do believe that we should see sellers come in, right about now. But it's in this particular scenario that we will be looking for the sellers, somewhere right around here. But we could get a deeper correction, but let's see what happens. So right around here, we see that it's still sort of respecting this structure area. And then what happens? Price falls and corrects lower. So you could have closed out right here and took your profit or hold out. But yeah, that's pretty much, how it goes. And if you just stick to the same rules over and over again, then you'll end up making better decisions.
Yeah, exactly. And one thing I wanted to point out, sometimes you may not have too much time to sort of look at your charts and scan for various opportunities to enter buy and sales and trading, because it does take some time where you have to analyze and look at what's going on with price behavior. But what you could do, you could just say, well, I'm, instead of me entering in on everything I see, I want to limit my over trading. If you are over trading, and you may say, okay, then once price touches those zones, those critical zones that we identify, even with our, when we draw in the price waves, when we draw in the price lines on our chart, we can make a decision to say whether I only want to look to either buy or sell when price touches these zones. And what that can do, that can sort of limit you from pulling the trigger prematurely. You'll stay out of certain positions early until you see something or see a setup that actually confirms what we typically know about market structure and about support and resistance and supply and demand levels. So then that could be something that you can put in practice and say, well, you know what? Like, I know it can be kind of risky to enter, trades on every small, trigger time frame, confirmation, you can say, or 3-wave pullback. So let me just, manage how often I engage the market. And since most of us have busy lives as it is, it may be more wiser to say, well, let me just set up price alerts around these critical zones so that when price gets back there, then I can make a decision on how I want to trade that zone, whether I want to wait for a break, a violation of it, and a pullback. It's up to you. But then that's something that you could put in operations to sort of save yourself from the hassle of trying to, analyze things at a micro level and figure out, okay, then what is the sentiment? What is going on? Because one thing we do know is that these swing points do matter, that you can see consistently throughout history. Well, let me get rid of it. Well, let me just go to this. But you can see consistently throughout history, price tends to honor these levels, these zones right here, multiple times, for almost like a, well, it's not the end of January. This is, of course, the review tool, but for almost a month, it honored the same zone. So then that's something that you can just put in practice and say, well, I'm going to stay out of the market, and I only want this platform or the broker to alert me whenever price touches these swing points, these pivot points, these zones that you can easily identify with the naked eye. So then that's something that you may want to put in practice, and and you can do very well just sticking to that. You don't have to jump in on every single swing, every single confirmation you see, but you can sort of limit yourself and exercise a level of self-control and patience and say, well, for these zones, I know these zones are known historically to be zones that markets turn in. So then let me just wait till price reaches these, price reversal zones, and then I can look for a setup, either for confirmation, or I can look for that 3-wave pullback into those zones so I can sell or buy from there.
Yep. So yeah. So then that's something that you should definitely do and practice. Practice drawing out these waves, these swings, and pretty much identifying these swings, these zones where price could potentially reverse. So
yeah.
But so then that's how you would draw out these waves in a play-by-play, almost real-time scenario. But you have to wait for price to either break a lower low or a higher high, or vice versa, in order for you to know what's really going on. And once that happens, then you draw out the waves.
Yeah. And, I want to also say this, you can't draw out, well, I wouldn't say you can't, because you can if you have the time. But just like I said, most of us are busy. So we don't have the time to draw out all the ways for all like 40 or 50 some pairs, currency pairs that your broker may have. So then really, that's the reason why we really strongly encourage you to pick maybe 2 or 3 currency pairs that you want to focus on, whether it's Euro USD or another major currency pair or whatever. You can do this. You can draw out the price waves on those pairs you focus on and have all of this data and intel there so that you can know, okay, then, well, I know in the pair that I specialize in or I'm focusing on, I know that this is a price reversal zone. I know this is historic structure. You get an idea of the feel of the market, the rhythm of that particular pair. So then you're more able to sort of assess how you want to trade when you focus on that. And also you're able to draw out all the price waves and be able to have more intel and more data instead of just going in, on limited knowledge and hoping that a key set of rules that you have in your day trading strategy will work in each currency pair. And of course, sometimes, a lot of times, you know, it may work, but if you want to be more, how can I say, more accurate, more precise, if you need more confirmation and you would like to, you know what's going on in price structure in that pair, then it's just best just to say, okay, let me just limit my analysis to 3 pairs, or even 4 at most. And then let me draw out these price waves so I can have all this data on hand so I can know what I want to do when the time comes for me to, buy or sell, or when a trigger or setup forms in that particular market. So then that's something that we do recommend. Of course, we provide a plethora of signals, for the group. But to be honest with you, we strongly encourage just to focus on a faithful few, master that, maybe 2 or 3 at the most, or I should say even 4 at the most if you do have the time, because even 4 takes up a lot of your time. But you want to do that so that you can kind of trade a little bit more precisely and accurately, and you won't find yourself jumping in on every single thing that looks like a setup, because certain price movements may look like setups, but it's not.
Yes, it's definitely not a setup. And it could fake you into making a move prematurely, or making a decision on what's taking place in the market prematurely. But yeah, this is basic information, but it's powerful. And oftentimes we skip the fundamentals, we skip the basics for the spectacular, for the advanced, quote unquote advanced, when really we don't need the advance. All we need to understand is how to draw the waves and understand structure in these zones. If you can do that, then you can be successful as a trader. But it takes practice. It takes practice understanding how this all works. And as you get better, you're gonna, of course, understand how to make better decisions and apply everything else that we're talking about. Like as far as the 3-way pullbacks, like all of that stuff is important too. But at the same time, is it needed in order to make a lot of money? No, like it's not really needed. If you understand structure and support and resistance, and you understand how to draw on your waves, then that's really all you need in order to make a lot of money trading the financial markets. So like in this case, we're still in the downward trend. We're going to wait for price to retrace. Where we're going to wait for price to retrace to, right to this area of structure right around here. This is where we want to see price retrace to. So are we going to get that? Well, we don't know. Price could, push a little bit higher, but we do see that we have this structure area right here as well. So then we could say, okay, then let me widen out this zone right around here. So then one thing we do know is that somewhere around here is where we could actually get price to reverse. So then what we're going to do is see if price could touch this area. So then now price is testing this particular area right here. The 20 SMA still sloping downward.
Yeah, and it's also, testing a 20 simple moving average at the moment.
Yep. So then, should we look for an opportunity to sell? Well, yeah, based on our plan, yeah, eventually you should. So then right here, we see that price, like I said, on the 1 hour, you can sort of predict, the wave structure, the 3-wave pattern to some degree. You could say from here to here to here. You could do something like that, where this could be the low from there to there. Let me change the color. And price pulled back right here. And now there could be a push, another push higher. So let me clone this. And right here.
Or it could be a 2, 3,
yeah,
6.
or it could be a 2, 3, 6 move. So then somewhere right around, this vicinity, or this area right here. I'm just gonna skip ahead, just to estimate, but somewhere right around here is where price could go. Oops. Let me turn that off. But yeah, I wanted to drag it up a little bit right there. Really, you want to go, probably we said to go to the close of the body candles. But anyways, let's see what happened. So then we can probably stay close. We'll just be zoomed in and see what happens. So then somewhere around here is where price can go. But let's see. Price comes up, pushes up. Okay, it's starting to move sideways. So then this is when you may want to consider, going in.
No, or just waiting for confirmation, waiting for the break.
Yeah, but okay, so then it does push higher. So let's zoom out and let's see what's going on. Okay, yeah, so then at this time, this is when price starts reversing. 20 SMA starts sloping upwards. So then now we're seeing a change in sentiment or change in our bias. So we may see price continue breaking to the upside. So
yeah, and what we have is almost like an inverted head and shoulders, or what could be forming as an inverted head and shoulders. So then you can, look for that, wait for confirmation, and then enter on bullish confirmation. But yeah, like lately, like the thing what they have to realize is that sentiment changes throughout the day, like, and especially if markets are locked in consolidation, because you remember about 70% of the time a pair would be in consolidation, and about 30 to 35 to 40% of the time they'll be trending in a particular direction. So most of the time you'll see price action ranging within consolidation just as much as you would see it break out and establish a trend. So then you want to be mindful of that. But then these swings and these changes in bias and sentiment happen. So then, you have to proceed with caution. But just like Melvin mentioned earlier, in trading, losses will be inevitable. What's really key is really controlling your risk, having proper sound money management procedures in place, and not, overdoing it or over trading. And that's a whole nother topic in itself, as far as, how do you sustain yourself in these type of environments where it seems tricky, the price actions can be confusing at times, and you find yourself in a losing streak. And there's things you can do on a risk parameter, risk procedural perspective, but also with money management that can sort of insulate yourself and hinder yourself from, losses or whatever.
Yeah. But one thing I want to point out is that, just like Marvin re-emphasized, you will have losses. However, if you apply what we're telling you, you will still have more winners than you do losers. So then your edge is still in play, it's intact. You haven't lost your edge. Just look at what we've had over the past,
this trade review.
Yeah, just with these reviews, like we started right around here, right? We entered this buy right here. This is when we started right around here with this buy. Price pushed all the way up and tested the highs. You could have closed out right around here or took partial profit. Price went down, pushed, corrected all the way up. By this time, things started shifting and changing. You saw a deeper correction. And if you wanted to, you could have waited for, bearish confirmation, more bearish confirmation to set in. But to make a long story short, this was a complex pullback. And then if you would have waited for bearish confirmation, you would have gotten in, right around here, and you see price fell lower. But even if you missed out on this, you hit a lower low, price corrected right back into this area. This was a perfect sell right around here. Price came down. That's another winner. So let's just say that right here. Okay, we winner right here, loser. Let's just assume this is a loser. And then we don't do anything here until price violates this low. Now we want to look for another opportunity, get a winner right here. Price pushes down. Price corrects.
How many winners is that so far?
Well, that's 2 winners and 1 loser. Price corrects, but it gives us this strong correction. So then we know that momentum may be reversing. Then we sit out. And plus, like we said, if price breaks and closes above this high, then you may want to sit out. But in this case, we had a strong push to the upside to test these highs.
V bottom.
So then, there's a possibility that things may be changing. So then we sat out and we waited for price to break this high right here, which it did, created a higher high, Now we need to wait for a higher low. So then what happens? We wait for price to retrace. It gave us, you know, a 3-wave pullback. It was sort of strong, but in this area, as soon as you enter the buy, price pushed all the way up. So
that's
now
3 out of 1, right?
So that's 3 winners out of 1 loser. In this case right here, price pulls back right here, and we get in right around here. This is a loser. Let's just assume this is a loser. Now we have 3 winners, 2 losers. Price pulls all the way back. We're still sort of in this bullish environment because we still have a higher low than this low. We're still in that bullish environment, but because the 20 SMA is sloping downwards, we want to wait for this environment to change. We want to wait for bullish confirmation. So then what happens? Price pushes up, corrects, and then we get another buying opportunity and price pushes up. Now we have 4 winners and 2 losers. So you guys get the point. Price corrects lower. Let's assume that we got in right around here. If that is the case, I'm thinking we did execute a trade here, but if that is the case, that's a loser. So now we have 4 winners, 3 losers. Price corrects all the way down or pushes all the way down. You get this next opportunity to short right around here. Price pushes down. So now that's 5 winners versus 3 losers. But what I'm saying is that you're always going to have an edge because your winners will always be at an advantage because remember, your reward to risk ratio is key. Like you're making more on your winners than you do on your losers. So then you're still ahead. You're still making great profits, even though it looks like we're close to about a 55 to 60% winning percentage. Yeah. We're still very much profitable, even in this scenario. So then you don't have to be right all the time in order to make a lot of money trading the markets. If you're right half the time, then you're going to make a killing. You're going to do well. Yeah. So then that's the key. Just at least be right half the time.
Right. And, you know, and one thing, you know, this really shows us is that even with markets, financial markets, there's always that give and take relationship where you're going to give back and then you're going to take and absorb profits, and you're going to always give back a little bit and then you're going to absorb and take huge profits. So then there's a give and take dance and this exchange that takes place in trading, and you have to be open to that. That's inevitable. That's going to be a part of trading, but the key is to not give away everything, not give too much. And just like Melvin said, because you have a trading strategy in play that you've tested and you know has a statistical edge or advantage, you'll always come out ahead in the end. You know, if you know what you're doing, if you're applying good money management, good risk management, you'll always come out in profits, you know, even when it seems like you're losing, you know, a little bit of your trades. As long as you know, just like in this example, we won 5 trades and we lost 3. So then, you know, of course, we're still ahead and we still have an edge and advantage and we're still in profits, you know, even, you know, after all of the 3 losses. So,
yeah, because just assume that, let me just show you the math. Let's just assume that, you know, for your trade, for your winners, you're winning 2 times more than what you risk. Like R is your risk. So then let me just write this out for you so you can see it. So then these are your winners. So then for your winners, you're making at least 2R. So then we have 5 winners, 5 winners. Let me do it. Well, 5 winners right here. That equals what we would call 10R, right? And let me stretch this out. So 5 winners equals what we would consider 10R or 10 whatever you're risking. Now, in your losers, we had 3 losers, right? So then let's do that. So then we have 3 losers right here. 3 losers. And that equals what you would call, you know, 3R. That's 3R because that's represents how much you're risking. So right here, we have 5 winners equals 10R, 3 losers equals 3R. So then how much are we in profit? Well, you just take these.
Yeah, let them answer it.
Yeah, like 10R minus 3R. Now, R is is a fixed number. That's what you're risking per trade. But if you subtract the two, then you get your total profit. So I know Chris chimed in, and even Sonia, and they said 7R. And that's exactly what you would get. Your total gain will be 7R. Total gain / return equals 7R in that case. So you're still very much in profit. Now, if you risk 2% per trade, then you take this 7, then you times it by 2, you'll be up 14%. If you risk 1% per trade, then you'll be up 7%. Out of all the trades that we just calculated, you'll be up 7%. So then what I'm saying is that you're going to have this give and take relationship. Now, what if the next trade is a loser? Like, what if right here we lost right here? That's another R. So then what does that take our total return down to? Just 6R. We're still ahead. We're still more ahead than we are down. Like, that's why you can't panic when you get losers, because they're going to happen. You know, so then what we're trying to point out here is that if you just apply the basics, do this over and over again, develop skill in this area, then you should always have an edge and you should have some sort of advantage. But that's it for today. I know I didn't get into some of the advanced stuff that I wanted to get into, but we can call it quits for now. I think we covered enough, and we went long enough. And yeah, maybe during our next Back to the Basics session, I'll cover exactly what I wanted to cover before, as far as you know, some information, some advanced gems that I wanted to share with you guys. But you know, we'll reserve that for another meeting. But anyways, thank you guys so much for coming to today's Back to the Basics session. We hope you got something out of it. What I would suggest is that you review this video. If you know, whenever you do get the recording, you review it, watch it, and you know, understand exactly how we approach the markets. But for the most part, if you do this over and over again, over time, you'll be able to develop a career in trading, and you'll make money, and you really won't have to really worry about money again, you know. So then of course, that was the reason why we wanted to rehash some of these concepts again. But this is what it's all about: understanding how to draw out the waves and knowing when you should look for a buy and when you should look for a sell, and when the market's trending upwards and when the market's trending downwards. But that's pretty much it. So all right, thanks again for coming. And like we say at the end of every single meeting, remember to always count your blessings, not your pips. And we would definitely see you guys at the start of the week, Monday. We have a live trading session. Please come. But thanks again, and we'll definitely talk to you guys soon. You guys have a wonderful rest of your day. All right. Talk to you later. All right. Get them. Bye.